Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Thursday, and this is tomorrow. Of course, we won't be broadcasting live because the markets will be closed for the Good Friday holiday. But today we have a bunch of stuff to cover. And it's really interesting. The news today, of course, was that. Elon Musk is looking to buy Twitter, and this is kind of interesting. But he's looking to buy Twitter, and we'll see. I think I can understand. If I was rich like that, I might be interested in buying Twitter as well. It has a tremendous number of users, and but it's kind of interesting what's going on. Basically, the stock dived on that news, but basically, Elon offered $54.20 a share, about $43 billion. Wow, I wish I could have a bit of that change in my pocket, but he believes it to be the platform of free speech. This is this quote here, and very interesting. I hope. We'll see what happens. Truth Social, that's the Trump platform, is not doing as well. So who knows what's going on here, but very interesting. On all this news, you would think that it would go up, but no, that's not the case. Twitter moved lower today, as did Tesla. And this kind of brings up an interesting point, and a point that I kind of want to make. I'm going to try to put out some videos on this, little short videos. The market has changed fundamentally, and because of this inflation, because of a lot of things that are going on, the normal places where we would go in the market, like the tax, it just isn't working. And what are the areas that are working? Well, I have a potential help for you. And you can find out by going to the www Dallas Trading Floor site. What I did is I put up just before the show a list of the heat map. We're going to be going through this, but we're a list of the heat map of every sector that is working in this market. So it's a tough market to trade. I realize that, but that doesn't necessarily mean that you just have to throw in the towel, because I've been making some progress, a bit not as big as I would have liked to have seen. Now, here's an interesting thing. Also, this is kind of warning us, that the stuff that was working before isn't working as well. Semiconductor stocks are just moving down. They're going to have some bad earnings, not necessarily bad earnings, but they're just going to get hurt. And the chip cycle, we just don't know what's going to go on with that. So we ought to be looking not necessarily in the market where we've been looking, but other areas. And the areas really that are showing the most strength are the areas that are related to some of these commodity stocks. I mean, it's an interesting time. It's an interesting time out there, just to see kind of what is going on. So let's see if I can bring up the heat map, and I'll tell you in a little bit how to get involved with this, because this is kind of a cool thing here. This is the Industrial Group strength map, and it is kind of an interesting one. And this is, let's see, there we go. All right, so I'm going to put this up on the screen. And what's interesting about this map here is this shows the areas of the market where we're seeing the strength. Now before, we were seeing most of the strength in the market basically in the techs, but that's not the case anymore. And let's take a look. The number one category currently in the market is agricultural chemicals. You say, what is agricultural chemicals? Well, agricultural chemicals are basically the fertilizer stocks. And that's one of the reasons why I bought a company called Icl yesterday. It's a fairly low price stock, but interesting in that it is, it is in the area that is moving the best in the market. And currently, let's see if we can move over there a little bit. Yeah, as you can see, kind of showing you kind of how the world has changed. And right now, we are, we are currently in, this is as of the 11th of November, the number one areas in the market from top, for the first top 10 areas are the agricultural chemicals, the oil and gas E&P companies. This is the international ones. The coal area. God, can you believe it? Coal. I bought a company called HCC, Warrior Met Coal. That's right in this area too. Oil and gas, Canadian Explorers, Royalty Trust, drilling, steel producers, metals and mining, and financials. Also, I've been looking to increase my exposure to the Reits. That's a little bit further down here. Let's see if we can find that. Real estate investment trust. That area seems to be moving up. Let's see if we can get that. Let's see. That's really an investment area. There you go. Real estate. There we go. There is the property REITs. It's down here. It's kind of far down. Number 46 on the list, but it's starting to show some strength. And this is an area that I have been trying to move into, and did buy a company today called Cubesmart. CUBE is the symbol on that one. And I also have another one REIT in there called America Homes for Rent. Now, here's the thing about the REITs. Even though they are looking pretty good, the thing about the REITs is that not everything is created equal. I'm looking at the property REITs and not the mortgage REITs for a lot of different reasons. And I'm also looking not in every area. Like, for instance, I'm skipping REITs that hold strip shopping centers and any kind of retail or office building because that area's been weak. I'm concentrating on the areas like logistics, warehousing, and also some of the areas that are more unusual, like the storage REITs, which I think are very strong. Of course, public storage is the number one in that. Didn't buy that one just because it wasn't set up right. Also, I'm looking for REITs that are single-family home related, and there's two of them in there. Of course, Invitation Homes and American Homes for Rent. I do own American Homes for Rent, so this is kind of an interesting area in the market where you can get some. You can get some traction there. So that is a good place to look in the market. Now, if you're on the action trailers, I'm going to try to send out the link tonight. I didn't have time enough to make the link, but today, but you can get it easily just by going to www.Dallas Trading Floor, and it's up on that today. You just push on the button, and you'll see it. Just put in your first and last name and email address, and we'll get you a link to this strength list. It's a great way to take a look at some of the areas in the market that are working. So that's definitely something that you might want to take a look at. Okay, let me just go. There we go. Here is what I currently have in the small portfolio. We're up on just about everything that we've got today, which is kind of nice. Again, I was talking a little bit about this America Homes for Rent. This is a REIT that I bought. It's not up a whole lot, but I definitely think it's coming out of a very nice pattern. We're up on this. We were basically being in this one day. We're just up just slightly, just a little bit under 1%. Not a whole lot, but definitely good, good as it goes. Our number one holding in the small portfolio right now, believe it or not, is Dollar Tree. Dollar Tree, DLTR, is a company that you probably are familiar with. One of the great things about Dollar Tree, and I think that you really have to kind of hand it to them, is that with Dollar Tree, those are some of the least expensive stores in the retail area. And I think that with this inflation, a lot of people are going to be using stores like Dollar Tree. They're going to be going away from the high price stores like your Whole Foods, and they're going to be shifting, and Kroger, and they're going to be shifting to the lower cost stores. And one of the stores, of course, I think that's going to do very, very well in this area is Dollar Tree. And I'm going to try to take a look. Let's look at the Dollar Tree. let's look at the chart, because I think Dollar Tree is still buy. Well, no, it's extended, unfortunately. Gosh, I wish it wasn't. We might have to look at this one go by, but I was buying it here right at the top, and then I did make another buy. It's up again. Dollar Tree has just been going crazy. It's up again from the buy point. The buy point, you were 15%. We're 18% above the pivot. Basically, in 7 days, that's pretty good. Checklist is not the greatest. It's 67%. That's my minimum for buying, but just doing some tremendous. This is the area of the market that you want to be in. Think of inflation as a tax. And unfortunately, with a tax like this, we're looking at people having to economize. Dollar Tree is going to be an advantage there. Now, it's not in my preferred categories because we looked at the heat map of where the capital is flowing in the market. The capital is flowing right now into the stock market, of course, into that oil and gas area, the agricultural chemicals, that's the fertilizer stocks. And then also it's flowing in, it's starting to flow into the REITs as well. So those are areas of the market that, right now I'd be very, very, very careful about buying anything tech related. Tesla is a great company, but it was down today. Twitter, down today. Most of the semiconductors, all down. And we're going into earnings season. I don't think this earnings season is going to be very kind to many of the stocks that, we normally think of. So, just try to put the blinders on. I know this is really hard because I like trading growth stocks too, but this inflation is just going to kill many of the growth stocks, at least for now. We'll see what happens. Where the money is going to move, though, in the market, it's going to move into several areas. One of the areas, of course, it's going to move into is oil and gas. We've already seen it go there. So there's some good oil and gas stocks in there. And if you don't want to pick a particular oil and gas stock, take a look at the Spider Select, which is the XLE. And I don't own it currently, only because I have individual stocks, but the XLE, and I'm going to show you the chart on this one. By the way, if you're looking on TikTok and you want to see the charts that I'm showing, just go to the profile, click on the link, and we're simulcasting this on on YouTube. So easy to see it. Here is the chart for the Spider, the Energy Select Spider, and look at this. It's just going up, okay? This is why I want to kind of indicate here, it's part of being in the right area of the market. Part of success in stock trading is being in the right area. Now, there's a lot of different companies in the E&P area, in the oil and gas area. What I mean by E&P is exploration and production. These are typically the companies that actually drill the oil, not necessarily like the Exxon Mobils that retail it and refine it. Those can be good as well, but this area is the area that is represented heavily in the Energy Select Spider. The XLE is this area, and look at this. Look at this chart. It's moving up very, very nicely. I just want to kind of show you that if you're looking for a place, if you're looking for a place in the market that makes sense. So that's kind of the long and short of it. Just go through the other things that in the small portfolio. Of course, I'm in Shell. Now, that's one of the big integrated companies. They are a refiner and a retailer as well, transporter, do everything. That's up as well. Not as strong. It's a bigger company. It takes a longer time for it to move. 6 days. We're up about 1.5%. Not a lot, but considering the market that we're in, not a bad thing either. I do own Novo Nordisk. This is the largest manufacturer of insulin in the world, and that is an area that seems to be very, very resistant to this inflation. So primarily I think it's because many of the people that buy from them, of course, they don't own directly. Just wanted to show you everything that I do have out there. It's kind of a long list, but not necessarily about it. We talked a little bit about Dollar Tree. That was up again today. We're off a little bit on Novo Nordisk today, but not a lot, and we're it's a pretty stable stock. Of course, we're up on Shell. On the XLV, I'm a little bit disappointed on this one. This is the Spider Select Healthcare. It has been down a little bit, so we don't know. That's sort of on the bubble. I still think that's going to do well. Down on Eli Lilly, that's one of my other big healthcare holdings. I'm not so sure that area is going to continue to do well. But look at these oils. OVV, it's an oil company. It's up. I have also a defense contractor in there, RTX. They make missiles, and that's primarily because of the conflict in Ukraine, why that one is up. The TX Ternium, this is a steel company, down a little bit, but I'm still very confident in the area. This is the one that I really think is interesting. It's ICL. It's and what it is it's an Israeli company, and they make fertilizer. This is the agricultural chemicals area that I was talking about. Here's the chart on it. You can see it's just going straight up. Now, this is the weekly chart, of course, but look at this. It's just going straight up. Now, I bought it basically right about here. Now, this is not a conventional buy point, but we're just seeing a lot of strength in this area. This is the number 2 area currently, agricultural chemicals, and this is one of the top in that area. I still think, you could probably get along for the ride. It's a very cheap stock, $13. I mean, normally I don't buy stocks in that range, but you cannot deny the strength of this one. It's got a cash flow of $1.03, which is amazing because it's only $13 stock. So we have a very good price to earnings ratio, about 19 on this one, but it's mostly the area in the market that it's in. There's going to be panic buying, unfortunately, of chemical fertilizers with the war in Ukraine, and so this is one of the ways you can get in on that is by going into this area. Look at their sales; they're up every quarter in the last 5 quarters. Now, this is kind of when it all started, and then but the most impressive thing about this is look at their profits. 420% was up in the last quarter. Now they're going to be announcing their earnings on the 6th of May, so we may see some more action there. But this is an area that definitely want to take a look at. The chemical fertilizer area. It's the number 2 area in the market right now, and so it just tends to be very, very strong. The other area that I've been moving into, of course, is the Reits. I do have American Homes for Rent. It's symbol AMH, and it's doing well as well today. It's off a little bit in the after hours, but again, it's up as well. As you can see, 41.55. It's right in the buy zone right now. Now, I did buy this one yesterday. I did buy this one yesterday. As you can see, it made its move. We were buying it basically at 41.15. It's currently about 41.55. It's a little bit volatile in the after hours, but I definitely see this one making a move higher. American Homes for Rent. And basically, again, this is another inflation play. Lots of inflation going on out there right now. And this one, basically what they do is they buy single-family homes. They own, I think, about over 57,000 of these things, mostly in the Sun Belt states, 1 to 5 years old, and the rents are good, at least for them. So people are not going to be able to buy as many homes, but they're going to rent them, and that's one of the things that's going to happen out there. Here's another REIT that I did buy, and I've been moving into these REITs. This one is called Cubesmart, and it's based in Pennsylvania, outside of Philadelphia. Basically, what Cubesmart does is that you rent a cube from them. They come to your house. They put your cube. It's like the pods. They put it down. You put your stuff in it. They come back. They put it in their cube warehouse, and it's doing very, very well. This is another area of the market that tends to be doing really well. Now, it's not the number 1 area. It's not the number 1 REIT out there. It's number 16 currently, but it's moving up. Now, of course, the number 1 the REITs are in the storage area. EXR, which is Extra Space, and also PSA, very, very strong as well. I would avoid, even though this is a strong one, Host Hotels, this is Marriott, I would avoid the hotel REITs, because I do think that with inflation and lack of business travel, I think a lot of these are going to have more trouble. So I'd be a little bit careful here. The interesting thing about the REITs is they just have a lot of different areas. It's an interesting way to own real estate. But I would stick to certain areas. I would stay out of the office REITs and off of the retail REITs and possibly some of the hotel REITs. But I would definitely look at the warehousing REITs like the number one Rexar, REXR. That's a very good one. Based in Los Angeles, lots of demand for industrial properties. That's what they own. And then also the storage REITs typically are very good as well. And I do think that coming on, we're going to see some more action in the home REITs, the ones that have single-family homes, American Homes for Rent, and Invitation Homes. So I've been kind of going on and on about that. So let's get to it. Let's get to your questions. Thanks for holding, everybody. And by the way, I won't be doing the show tomorrow because of Good Friday. The markets will be closed, so I won't be doing the show tomorrow just because the markets will be closed. So, that's kind of the way it is. I'll be back after this show on Monday. I'll be back on Monday at 5 o'clock Central Time. Same kind of thing. All right, let's for Saeed. Thank you for asking the question. BRCC. Let's take a look. BRCC. And BRCC is a company that I am not that familiar with. It sells premium coffee. Oh, this is Black Rifle Coffee. Interesting. I would kind of be careful with this one because I don't see it. I know it does have a 99 relative strength, and it's moved up above the buy point, the 2280 buy point. But I would just be careful with this one. Let's kind of take a look to see kind of what it's got. It's got a 56 checklist. Yeah, this just doesn't stack up, unfortunately. I would just be careful of this one. Yeah, this just doesn't stack up. They have negative earnings, so that's not good. So yeah, this is more kind of a meme stock, which is okay. But my take on this one, on Black Rifle, is I personally wouldn't be a buyer of Black Rifle Coffee Company. I just wouldn't be, because there's just more. It's just, first of all, it's not a long enough track. It's not a long enough track record. There's no earnings. That's a problem. And going forward, I think with a lot of inflation, a lot of these things that people wanted to do before, these discretionary expenses are gonna go away, because I think a lot of people are going to be forced. A large number of people are forced, are going to economize. That's why I'm looking at things such as Dollar Tree and Dollar General. People are going to be using dollar stores more. They're going to be cutting back on their expenses. Why? Because everything is going up. Everything is going up. So the areas in the market, everything is related to inflation, and we've had some of the strongest inflation that we've had in 40 years. So I'm old enough to remember Jimmy Carter, and I remember what a disaster that was. And I think, unfortunately, we're going to get a little bit of a taste of it, and that's sad. But that's kind of sad. All right, METC, METC. Of course, this is a coal play. That's why coal and stuff like that is doing so well, because it's just that kind of deal. As always, Mr. Jeet, you're right on top of it. This is a good stock. I mean, look at this. It's got this cup without handle formation. It's come right up to the buy point. Boy, their numbers are looking good. I think this is viable. I really do. Look at this. Look at these numbers. These are fantastic numbers related to their their performance. Relatively good PE ratio, 21. So I don't think we're overly high on the PE. We've got this relative rating of 99. But what's more important is look at this this relative strength line. And sometimes these little squiggly lines are hard to understand, but look at that. It's just going straight up. So this stock relative to the rest of the market, it's relatively stronger. Notice how the S&P, the NASDAQ is pointing lower. Isn't that interesting? So basically, this is moving up, and the NASDAQ is moving down. So this is very strong. This is very, very bullish. Not a lot of funds own this. Look at only 17%. A lot of people with a lot of money own this. I'm sure that probably in West Virginia, places like that, because there are some fabulously rich people, believe it or not, that do own these things. Cash flow is really good. Yeah, I mean, I just like this all the way around. Yeah, let's look at the pattern rec on it. Yeah, I mean, we're basically just 3% below the pivot. So yeah, I think this is a buy. I definitely do. I definitely think this is a buy. Absolutely. So yeah, I mean, thank you for bringing this one up. I think we should put this, at the very minimum, this is on the buy list here. So I like this one a lot, and yeah, I think you can definitely put it on the buy list. Now, I already have a coal company, but because I have HCC, but this one, METC, METC, is a buy. That's a buy, totally. And I think you're picking some very, very good stocks. This is the right thing for right now, and so I think that you have a potential of doing very, very well if you go with this stock. So I think you could buy this right now, and I think it's right below the buy point, and I think it's looking really, really good. All right, you invest in Turtle Beach. What is Turtle Beach? Okay, let's look at. All right, I'm just looking here for. Oh, what is the Israeli stock name? Interesting. Thank you for that. The stock I'm talking about, I'm talking to TikTok here. The stock I'm talking about is ICL. Okay, and what ICL is, it's a fertilizer company that is actually based in Israel. And, it's interesting because another stock that was buyable up until very, very recently was Zim Shipping, and that was another Israeli stock. So it's very interesting. Some of these Israeli-based companies are very, very interesting and very worth looking at. This is ICL Group, and as you can see, let's kind of take a 20,000-foot view on this one, and this is definitely in the area that I kind of want to highlight. Well, look at that. I mean, up until this stock has been around for a good amount of time, going all the way back to 2004. This stock had never been above about $7.50. Look at this; it's at $12.68. If you can take a look at this. So this has just been going up, up, up. Why? Well, because it's in this top area. And we have a situation, unfortunately, in the world where we're going to have interruption in food supplies. Unfortunately, I don't know if you've taken a look at what's going on in Sri Lanka right now, but they're going to have a famine. They might have a famine there. And so what's happening with this wheat and other grains that have been taken off the market, and they could have bread riots in Egypt by the summer because they heavily subsidize that in some parts of the world. And I'm not wishing this on anyone, but fertilizer is going to become very, very important. Why? Because people are going to plant, but they're going to need more fertilizer, and the fertilizer is going to be a lot more expensive. And this ICL just has the just has the numbers. Now, I already own another company that's similar to this. It's called Nutrien, NTR, and that's kind of the leader, and that's also has a similar pattern. This is a little bit more expensive stock. This is the one that I owned initially. It's been going up tremendously as well. This is a Canadian-based company, very, very large. It's called Nutrien, based in Saskatchewan. A very nice place, by the way, especially in the summer. And this one has done very, very well as well. So I'm in Nutrien, and I'm also in ICL. So why am I there? Well, that the market is saying that that's a place that we need to be in the market. And that's really all I'm showing you here is that is that the market is showing us. Let's go back to that heat map. The market is showing us where we need to kind of be looking for, we need to be looking at things. And if we look at this heat map, we can see, and I'm moving it out right, we can see that, let's go up a little bit. We can see that in the top groups, and that's kind of where we got to look, agricultural chemicals right up there at the very, very top. In the coal area, I want to kind of highlight Arch, that's another coal company. I own HCC. This is a very strong company as well. This is Warrior Met Coal. And if you'll notice, all the other ones, oil and gas, steel producers. I have Ternium, TX in there. Probably not the best one. I probably didn't pick the best one. I picked the one that was setting up, but probably not the best one. Mining, interestingly enough, you might want to look at Rio. That's a symbol there. And Mini Periodical is kind of a weird one. There's only about 2 things in that, so it's not really as important. The integrated oil and gas companies, that's definitely, you should be looking at that. And there is medical distributors, that's like McKesson. But look at this. It's dominated, basically by oil and gas. There's some shipping in there. I got rid of my shipping. I think that's starting to move downwards. But I mean, it's still strong, but it's moving down. But so that's kind of where you got to look in the market. So by going to look at some of these companies like ICL, you're definitely going where the rest of the money is going. So very interesting thing. Okay, so another question from TikTok, AMS, and let me see if I can go back to AMS and get that up here. And that American Shared Hospitality Services not doing too well, unfortunately. Again, you don't want to buy these on the downward trend, So, and that's definitely what's happening here. AMS, unfortunately, is moving lower. If we go back to the daily chart, we were looking at. We noticed that it's underneath that critical 200-day moving average. So this one, I just can't recommend it. AMS is not a buy, and it's just you don't want to be where. You want to be where the market is going right now. AMS is not a buy, so I would avoid this one because there's not strength in this area. AMS, American Shared Hospitality Services, just not doing very well relative to the other ones. The checklist is terrible, 33%. Not a good look on that. And on the pattern rec, we are way below the pivot. This is a cheap stock, but you want to avoid this one. You want to avoid this one. It's just not working very, very well. So, just not a good thing. Okay, thanks, Jay. If Elon buys Twitter, does that mean the stock will be worth $54 million? Not necessarily. Not necessarily. Believe it or not, you can buy a stock and it isn't worth what it is. Sometimes it's worth more. Like that, the whole strategy, for instance, of Warren Buffett, he's what they call a value investor, is to try to buy stocks for less than the book value. And what do I mean by the book value? Well, if you've taken an accounting course, you probably know what I'm talking about. The book value is not the value that the stock market puts on it, but it's the accounting value of it, the value of the revenues, the income statements, and the owner's equity based on the assets that they have on the books. So, Warren Buffett tries to buy below the asset, but many times when you're buying a stock, you don't necessarily want to buy it for less than the asset value because it sounds like it's a great idea. In most markets, it sounds like a great idea, but it's not necessarily because there may be a reason you can buy it below the book value, and a lot of times it's because it's in a declining industry. Now, everything has been flipped on its head basically with this inflation because all of a sudden many of these growth stocks, the stocks that have a lot of potential movement up just aren't looking as good because people are worried that, yeah, you might get negative profits, and we just don't want to be funding those negative profits in a rising interest rate environment. So does that mean that Twitter is going to be worth $54 billion? Not necessarily, because he could go in, he could buy the whole thing, and then the stock could open, and it could open down. So it could open down. Now, it depends on it. There's a lot of different ways to skin the cat here. It depends on how Elon buys it. Does he buy 90%? Does he buy control? Yeah, I mean, there's a lot of different ways in accounting. Is he going to have to merge it into something? He could buy it personally, which is absolutely amazing. He would have to sell some Tesla stock, but he could buy it and take it private. And that's kind of, I think, what they're driving at here. He could buy it and take it private, but not necessarily worth $54 million. What he might do is he might buy it and then take it private, build it up again, and then at a later time try to reissue the stock. But not a good time for IPOs right now. All right, TOLWF has been holding 1.5 years up 200%. That's interesting. Okay. Thanks, Troy. Thanks. Hope things are going well in Canada, in Toronto. Toronto Maple Leafs. Great team, of course. All right. Let's take a look to see. You know what? I'm not seeing. Oh, I see. TO. Okay. I think that I don't know if it'll let me see that. Unfortunately, I don't think I can show. Unfortunately, I don't have access to that particular symbol, and I know it's on the Toronto Exchange, and I apologize for that. I've got to get some software that lets me do more of the more of the Canadian the Toronto Exchange, because there's so many good oil and gas companies on there. A lot of them are co-listed, but I don't know if that's one of them, but definitely I don't have the capability of bringing up that chart, so apologize for that. Troy, but I always like the stuff that you put up because it's interesting. WKX. Let's take a look at WKX. Not familiar with Skechers. Okay, well, I was big into apparel, especially shoes, but unfortunately that was last year, and I did pretty well with some positions in Nike. But, this year has just not been a good year for this group. The apparel group, the apparels, shoes, and related manufacturing is almost one of the worst groups out there. Currently, it's 194 out of 197. Let me kind of clue you in on that, on kind of where that is. And it's interesting because, it is having difficulties, relating to that. So I'm just going to go back to the groups. This is way down at the bottom. Let's see. Yeah, apparel and shoe manufacturing. Okay. So what I'm going to do here is I'm going to click back to the heat map here, and I want to show you why I wouldn't recommend Skechers. First of all, because it's in the wrong group. If you look here, there's only two groups right now that I'm tracking below that: computer software educational and retail mail order. So not a place that I want to be. I don't want to be involved with this apparel, shoes, and related manufacturing. I just don't want to be there. Why? Because it just doesn't make sense. Okay, well, here's Skechers. Let's take a look at the trend. Well, the trend, and indeed, it is reflecting in this chart. The trend is down. Okay. It's trading below that 200-day line, and looky. This is where the 40-day crossed below the 200-day. This is what they call the death cross. And you can see there's a lot of selling. This is a basic 2 quarters ago. It basically, when this downtrend trend started, really at about November, that's when this started really getting it and hurting. This stock was hurting. Now, I might consider this one as a potential short. And why? Because, well, look at the pattern. Let's see if we can go back to the weekly chart to see kind of what's going on here. This is a potential short. Why? Because we have a head here, and we've got a left shoulder, and we've got a lower right shoulder. This is a setup for a short. And look at how it's trying to make its way back to that 200-day moving average, and it's failing. So this one is a potential short. So here's the thing: the direction on Skechers is down, and that's just the way it is. So SKX is in a downward trend, in a very low, in a very bad, let's just put it very, very weak, that's area of the market. Avoid. And this one, might actually even be, as I say, potentially short because of the way it's set up here. And so it's not necessarily set up very, very well for that. So I would be avoiding this one. I would basically be avoiding this one. It just it's just not set up well at all, unfortunately. All right, where do we go to see that heat map? That's a good question. The way you go to see the heat map is www Dallas Trading Floor. Now let me kind of show you how that works. I'm just gonna pull that up here, and let's see if I can put it up there. But and the easy way to get it, there we go. Do you mean Dallas Trading Floor? Yeah, absolutely I do. But are we? Yeah. So there. Oh, can't be reached. Why can't it? Let's put it up again. There we go. And so basically, to get access to the Dallas Trading Floor heat map, super easy. Just go to Dallas Trading Floor, and it'll look like this. And you just scroll on down here. Kind of show you that. And you see where this one, it says Stock Market Heat Map here. Kind of, if you can see it. I don't know if you can see it. You should be able to see it. And you just click on that link, and you're good to go. And what'll happen is it'll give you the heat map here. So just go to www Dallas Trading Floor, and you can move right on over to the to where you can take a look at the heat map. So that's where you go for the heat map. Thanks for asking on that. All right, let's another one from Jeet. Thank you, PLTK. And let's look at PLT. Play like holding company. Ooh, I do not like this chart. Another problem child chart, unfortunately. Looking here at the weekly chart here, downward trend, just don't want to look at it. In this kind of market that's weak, you just don't want to buy anything that's in a downward trend. Unfortunately, this one is in a downward trend. Cannot recommend it. It's got good cash flow though, but I just don't think you can recommend this. It's a social games. Interesting. This is another Israeli company, but I cannot recommend this one. Just not looking very, very good. It has a weak checklist 56. That's below. So I just think you got to avoid this one. Yeah, I just think you have to avoid PLTK, and I think you got to avoid that because it's just not looking very good. So I just think you got to avoid this one, and I wouldn't be a buyer. I wouldn't be a buyer of it. In this kind of environment, you got to be a little bit selective. You got to be buying in areas that are going to give you the best bet. All right, so let's look at AMD. That's probably going to be the last one because we're coming up on 45 minutes. I wish AMD was a buy. Believe me, I wish this was a buy. But unfortunately, as you can see with this chart, we have a downward trend and we're below that 200-day line. I just can't buy it here, unfortunately. The chip companies, as I was saying before, many of these chip companies are going to have issues, and it's just the way the market is right now. A lot of uncertainty in terms of in terms of the market. This sector is just not doing very, very well. So I think this sector is going to get hurt as we're coming into earnings season, and I think AMD is no is basically no exception on this rule. I do believe we're going to have some problems in this area because of inflation. It's going to be tough, even though there's a backlog in certain of the chips. I think that this is going to be very, very compromised area. So I would stay out of the chips right now. I would stay out of AMD right now. It's just not the right time. Thank you. Hey, thank you very much for following me. I so appreciate that. If you're not already a member of the Action Trade Alerts, I always ask people that consider, because it is free. It is free. We do have some paid services like the Discord room, and we do trade. We do basically the first 2 hours of the day. I kind of show you the trades that I'm making, kind of what I'm doing. I really appreciate the fact that you are following, and I do want to ask your help, because I do need help. And one of the things I need help on is please like this, because if you like it, it gets it out to more people. Really helps us out. It really helps us out. And do consider possibly, going to www Dallas Trading Floor and signing up for our free email service, first and last name. And of course, you can cancel the service anytime you like. It's free. But it's at www Dallas Trading Floor. Now, unfortunately, because I could do this all the time. We're not going to be around tomorrow. Why? Because the markets are going to be closed. So we won't be broadcasting tomorrow. It's Good Friday. We will be back. We will be back on Monday at 5 o'clock at the regular time, because the markets will be back open then, and for a live show. So thanks everybody for taking a look at the show. So appreciate it, and have a nice weekend. It's going to be a long weekend, and I'm looking forward to that. So happy trading, everybody. I'll see you back here on Monday at 5 p.m.